Marcus is a 38-year-old software developer in Halifax. He left Toronto during the pandemic. Same job, same Ontario salary, same paycheck showing Ontario tax coming off every 2 weeks. Everything looked normal. Then his accountant called in March with news that stung. Marcus owed an additional $1,900 at tax time. He hadn't made an error. He hadn't missed a payment. He'd simply never heard of the one form that would have prevented the whole mess. Here is the rule that catches remote workers off guard. You pay provincial income tax based on where you live on December 31 of the tax year, not where your employer is located. It doesn't matter that Marcus's company is headquartered in Toronto. It doesn't matter that his paycheck stubs say Ontario. What matters is that on the last day of the year, Marcus was living in Nova Scotia. The Canada Revenue Agency makes him a Nova Scotia resident for tax purposes, and Nova Scotia wants its share. Here is where the math becomes real. On a salary of $95,000, Ontario provincial tax runs approximately $8,700. Nova Scotia charges more. The province hits harder at higher incomes, and the total Nova Scotia provincial tax on $95,000 comes to approximately $10,600. The gap? $10,600 minus $8,700 equals roughly $1,900. Marcus paid every payroll deduction on time, every paycheck, all year long. He still owed $1,900 because the wrong province was calculating his tax the entire time. Here is the layer most people never see coming. There is a form called the TD1. You fill it out on your first day at a new job. The provincial version tells your employer which province's rates to use when calculating your withholding. Most remote workers fill one out when they're hired, then never think about it again. Your employer's payroll system does not update itself when you move. It cannot read your mailing address. It withholds based on whatever province you declared when you were first hired. The CRA puts the responsibility on you, the employee, to notify your employer when your province of residence changes. Marcus never submitted an updated Nova Scotia TD1, so Ontario tax kept coming off, and the gap grew quietly, paycheck by paycheck, for 12 months. It also works in reverse. Move from Nova Scotia to Alberta, where the provincial rate is lower, and you will likely get a refund. But that means you gave the government an interest-free loan all year instead. Here is what to do right now. Step 1. Call or email your HR or payroll department today and ask one question. Which province are you using for my provincial tax withholding? If the answer does not match where you actually live, you have a 10-minute task ahead of you. Step 2. Go to the CRA website and search TD1 forms. Download the provincial TD1 for your current province of residence. Fill it out, submit it to payroll. That is it. Going forward, your employer withholds at the correct provincial rate. Step 3. Log into CRA My Account and confirm the CRA has your current address and province on file. Step 4. If you moved to or from Quebec, the TD1 does not apply to the provincial portion. You will need the TP1015.3V form from Revenue Quebec instead. That is a separate process worth a conversation with a tax professional. April 30 is 17 days away. If you work remotely for a company in a different province, spend 5 minutes on that HR email today. The fix is free. Marcus's $1,900 surprise was entirely preventable. One form, one conversation, 10 minutes.